Welcome to Empowered Returns, a show that surfaces forward-thinking real estate advice that investors and developers need to help them invest smarter and build better.
Hello and welcome to another episode of Empowered Returns. I am your host, PT Vineburgh, founding partner here at Charles Gate. Without my cohort, Mike DeMella, today, but very pleased and excited to have Chris Sower, the executive managing principal of Cushman and Wakefield, here to join us today to talk all things commercial, multifamily real estate, and big name in our local market. Really excited to have you here. Welcome.
Awesome. Thanks for having me. Appreciate it.
You bet. So let's just kind of jump into it. Talk about sort of how you got started, how you landed at Cushman, and what your kind of day-to-day core focus is.
Yeah. So I actually grew up in the real estate business back in the Midwest. And my dad was a residential broker for years. So kind of was always in it and kind of, loved it. At Cushman, what we do is all multifamily for New England. So we run from Maine all the way down to the Fairfield County line, multifamily, existing, value add, land, joint ventures, so anything in that space is kind of where we spend our time. Been with Cushman for about 2.5 years now. So.
Nice. So you had some stops along the way, and you were at some other kind of national platforms, some more sort of regional boutique type brokerages. What attracted you to Cushman, and kind of how's the platform at Cushman, different and clearly obviously better than your competitors?
Yeah, my wife has a great saying that you wouldn't be able to do what you're doing now if you hadn't done what you did before.
Yeah.
So,
okay.
The boutiques, the different platforms, started at CB, spent some time in the boutique side, was at Colliers. So learned a lot of the business along the way and really found out where our niche was in the market. The big thing for us with Cushman was, I think it was not only the national platform, but there's a really good group of people that are East Coast focused. So from Mid-Atlantic to Boston, it's like a very integrated, strong team. And having those people as part of an extension of our Boston team was really what was really made it attractive for us to make the move over to Cushman a couple of years ago. So
cool. So I didn't realize that your team kind of extends all the way from Fairfield County to Maine. Yeah. Obviously we're hyper. We're pretty focused regionally on our sort of eastern Massachusetts, southern New Hampshire, a little bit of Rhode Island, but. What's the kind of the breakdown in deal flow that you guys are servicing, within that region?
I'd say most of it's kind of, 128 Boston or kind of 128, 495. But we've had great success in the last couple of years. Rhode Island, Maine, New Hampshire, done a lot down in Connecticut. And I think really as COVID kind of opened up a lot of new markets that weren't really on the radar. Yeah. We found ourselves going to these markets and kind of following the opportunities. So, doing deals in Danbury, Connecticut, and New Haven, Connecticut, and Portland, Maine, and Rhode Island, and Providence. So, and most of these are pretty easy to get to, but we cover a pretty big territory. So,
all right. Awesome. So, I mean, you've obviously been, I am going to pump your tires. I mean, you're a guest. I've got to pump your tires.
It's okay.
You've been very successful, right? And, you're definitely a relationship guy. I mean, we've been lucky enough to build a great relationship with you and your team. And obviously we've both been around here for, we won't even say how long on the air. I mean, you got a little gray beard over there.
Hey, the salt and pepper.
We're getting some gray hair over here.
Salt and pepper's not a bad thing.
It's tough. But so, what are kind of if you had to break it down, what are sort of the handful? We'll just say handful, right? Couple, 3, 4 principles that have really sort of guided your trajectory to kind of get you where you are professionally at this stage.
I mean, listen, the easy response is the hard work, right? And, that's that. I love what I do. When I moved to Boston, I was in the mutual fund business and I was after college and I was like, that's not for me. Left the business, get into real estate and brokerage. Brokerage isn't for everybody. It's, as you know, it's a lot.
I've got to interject for a second. Can we talk about what was your first foray into brokerage?
Absolutely. I am happy to say that I left my job at MFS as a mutual fund guy to go rent apartments in Allston and Brighton. Boom. I did one weekend and I was like, all right, here we go.
Ground zero.
Here we go.
Just the greatest place in the world to learn real estate.
Exactly.
I think it's come up a couple other times on some other guests we've had, but I don't think it's any coincidence that a lot of people who've done really well in this business locally and have, risen to the very tops of far more, we'll just say, sophisticated. Ends of the real estate business than simple apartment rentals. All started there in that market. Not a better place to cut your teeth.
I mean, it was a little scary at times.
No.
I mean, all of a sudden, Brighton, I'm doing it, but still have relationships from doing that and getting that business. Yeah. But it's like, again, you if you like that side of the business, and it was a great summer, and I've gotten my nephews and other people. I brought them in, like, go make some money for the summertime. And I don't know if they've stuck with it. They're like, you're kind of crazy for kind of doing what you guys do, but but I think, so it's the hard work and the love of the business. I think the other thing is, and I learned this when I worked at my first job at CB, was your team. You got to have a good team. You got to trust your team. You got to have transparency with your team. And, the success of one is not without, the success of everybody else. So, it's we've got a 7-person team, and we all are involved, and I try to over communicate on everything. And with that, I think that I really try to push that hard in terms of building that culture within within our smaller team. So.
Yeah. So from like 10,000 feet up, how does your team break down as far as what people's core focus is day to day?
I mean, the great thing is that we're all multifamily, right?
Yeah.
And everyone's got different relationships. We are completely transparent about who's talking to who, so we're not, tripping over each other and calling the same person. And you got to have trust in your teammates to do that.
Yep.
You kind of have to foster that environment.
Yeah.
And we do, a business development call every week, and it's like, who are we talking to? What's going on? And so I would say I'm doing more of the institutional and kind of bigger middle market stuff. But then we've got everything from the development side to joint venture equity side, and we're all working on all of those. And depending on where we are and what people have availability and capacity, we're doing all of that. So
awesome. All right, so I think that's probably a good segue. What do you see in the market right now? I'm sure.
Yeah.
We obviously get those questions all day, every day, but sort of. On your end of the business, both on the existing product and the development side, and are you seeing any differences there? And just kind of what, macro picture, what do you think the second half of this year looks like and into 2024?
Yeah. So I think, as you guys know, you guys live it and breathe it. I think the fundamentals are super strong, right? So, rent growth, occupancy, vacancy, I think we're really strong. And when I listen to these national calls and regional calls, I think we're doing a lot better. Some of these other markets are doing. So I think that's a big checkbox for us. I think the market has been trying to figure out what it wants. Where does it want to go? I think, people have been trying to figure out how to structure deals in the new environment that we're in with interest rates.
Right.
And, obviously construction financing and everything else and acquisition financing has changed dramatically. So I think that's the biggest challenge that we find today. I think people that are transacting are kind of coming to where the market is and acknowledging where the market is. I think the other thing is we didn't have a lot of data points, right? There weren't a lot of sales to point to.
Right.
There weren't like, hey, this is where cap rates are today. This is where we were, and this is where we've gone to. But in the last couple of weeks, we've seen data points. So there have been trades, right? Church Park traded around the corner from here.
Yeah,
so
it's a big one.
And that was obviously big institutional buyer, big price, big per unit. So it feels like in the last, call it 30 days, where we've been trying to figure out our way, that people, I think, are getting more comfortable with where we are. And we've seen more activity on deals. I don't know if people are feeling like we're maybe towards the end of the interest rate hikes. But we've definitely seen things cautiously optimistic, knock on wood. I don't mess up the sounding, but knock on wood.
Yeah.
It feels like we're getting a little more clarity on where the market's going. So.
On the resi side, the price per square foot's the dominant index, right? Cap rates on your side's the dominant index. What have you seen over, we'll call it the last 18 months as the interest rates, basically doubled, right? How much impact on cap rates have you seen, and sort of temper that, I guess, with maybe bucketing it on more core real estate versus more emerging markets real estate, and is there a delta there? And
So I mean, let's on the institutional level, I think when everything was extremely active, I think you could look at cap rates being as aggressive in like the mid threes, right? Okay. I think where we are now that we have some data points, maybe now it's a low to mid 4 thereabouts, right? So whatever you want to call that, 75 basis points, 100 basis points, whatever you want to call. So that's, I would say, the institutional side of it. I would say private capital has actually been driving a lot of the market, and a lot of the trades that have been happening have been private and middle market sales. I think people have more cash. I think they aren't as afraid of some of the bigger macro issues that some of the institutions might be concerned with. So I think they're viewing it as a buying opportunity. But in that private space, if you're a leveraged buyer and you're trying to get 70, 75%, it's tough. And whether it's 5.25, 5.5, whatever it is, a lot of these buyers are solving for positive leverage. And to get to positive leverage with that kind of rate, you got to have to solve backwards into where that pricing needs to be. There is an appetite for groups that are willing to take a couple of years of negative leverage if there's an opportunity and they find a way to get to positive leverage. So if it's a value add deal, someone may be willing to take a lower cap rate in place because they see a path in the next couple of years through renovations or rent increases, whatever it's going to be, to do that. So I think that's the private middle market side. The development side has been tricky, right?
Yeah.
And the new kind of, a hurdle that everyone's looking at is everyone needs to be kind of around a 6% return on cost, right? And relatively speaking, we were, call it maybe a 4.5, 4.75 before kind of interest rate movement. So there's been a big move there.
Yeah.
Now there are groups that have separate accounts, separate buckets of money, REITs, advisors that may have, I the most aggressive capital we've kind of heard is like 5.5 to a 5.75. So, but obviously there's been big movement there. So, but I think people have said, hey, there's a lot of opportunity, in the land space right now where a lot of people have moved away from that avenue. So.
Yeah. I think that's one area that there's been a clear change in valuation on the land side, right?
Yeah, for sure.
And then obviously we'll get into some of the challenges that we're seeing right now, but forget the political climate, which we'll get into, but on the financing side.
We'll do that off the record.
Yeah, right. Well, we'll a combination. We'll do a combination. Okay. We'll have it on the record.
Fair enough.
But, I feel like especially on permitted condo projects, really challenging right now, right? Because I think condo financing is really challenging. You need a lot more equity.
Yeah, you need a lot more equity.
And it's just eating into the margins. And to your point, if you need a recalibration on what the expectation is on, equity multiples on the buy side and the development side. Yeah. And then obviously you need a recalibration on the land value, which we know how that push-pull goes, right? So can you speak to a little bit of that, what the dynamic of that within the market right now?
So I think, the financing side on the existing product, I think again, if the deal underwrites, you can still get, call it 70%, right? Yeah. Maybe 75% if it's a relationship bank or whatever it may be.
Okay.
From what we've seen on the construction side is, I think a lot of banks are just being more conservative. And I think, we've seen 50 to 60% of LTC on development side. If you're going with a non-recourse loan, if people are willing to do recourse and take that responsibility, I think people are willing to probably get up to maybe 70%. So again, the local and regional banks have stayed really active in that space,
right?
Where a lot of other markets don't have that. So we still have that here. And again, I think a lot of that is really sponsorship driven, right? So I think people are comfortable with a higher leverage if it's a proven developer. On the equity side, I think a lot of people have kind of taken a pause. There's still activity out there, but I think they're really focused on existing relationships they have, sponsors they've done business with proven track records. So I think there's comfort there. The one thing I would say is as the LTC or the construction financing has kind of come back in from a percentage perspective, there's been a lot of changes in the capital stack where it was, we were going to do a 60%, 70% construction loan. We were going to do a 90-10 on the equity structure. There's now a lot of different kind of money where the common equity might not be as available as it was 6-9 months ago. There's now a ton of pref money in the market. There's a ton of mezz money in the market. So the market shifted to different kind of equity available or financing available in the capital stacks. And it's a different way to look at it, but it's there, but it's different. And that only gets you, call it 80 to 85%, where everyone was trying to get to a 90-10 structure in the past. So it's changed. It's changed. But the money's still there. It's just a different form.
Okay. All right. That's great insight. Thanks.
Sure.
So what are a couple of specific memorable deals that you've been a part of, both recently and just kind of throughout your career. And I just love to get the war stories.
No. I think most recently, I think we just closed a big deal end of last year down in New Haven, Connecticut. And I look at that one, it was a huge deal for our team, right? To have a $160 million deal trade a tower in New Haven. We sold it for an institutional pension fund. Like it was, what we've been working towards. And we were doing that as the market's shifting, right? So as rates are moving, I think we ended up closing in like October and November, right? So we're really managing it as things are shifting.
That was in like right in the
heart
of the hurricane,
right in the heart of it. And but we had a great buyer, and they had an agency execution on the financing side. And just proud with our team and our tri-state team, we were able to kind of keep things together and keep things in line and keep everyone focused and on track. But so that was a big accomplishment. So, way back in the day, I still remember going back to the roots in Austin and Brighton, selling the Green District way back in the day.
That's right. You did sell that.
That was, God, how many times have I spent, walking up and down Com Ave and Griggs and, the whole thing. So that personally for me was one of our first big deals that we did. And, there was a lot of connections there with, with Mount Vernon and the Torrington companies and like having that personal relationship. And it was a huge deal where we were kind of boutique-y and did a big deal.
So my office in Alston was at 1310.
Oh, yeah. So you were right there.
It was literally right behind it.
Yeah. And it was great because we knew the Alston Brighton story and everyone was like, wait, isn't this all college students? Like, what's the story here? And like, they proved it was a deal where the development, new construction proved the market that no one really thought was there. And now look how much activity is happening.
I remember that trade at the time.
Yeah.
And that really kind of set the tone for that whole submarket.
Yeah. I think it was like, we were like, whatever, 500 a unit or 520 a unit or whatever. It was like, oh my gosh, like that's crazy, So and now people would obviously jump at the opportunity to do a deal like that.
We sell condos out there for $1,200 a square foot. It's like insane. Like when you think about, when you started out there, you had the crystal ball. But
exactly. To look back, right? To look back. So
totally. So did you go down to New Haven a lot for that big deal?
I did. Spend a lot of time on the road. So, and that's okay.
Got Sally's or Pepe's? What do we?
I was never really there that long. It was like property diligence, property tour, spend all day there, back in the truck and heading back home. So
my mother's from New Haven.
Oh, nice. There you go.
Yeah.
Okay.
And so we used to go down there and obviously, known for its pizza.
Yeah.
And there's the Pepe's.
Yes.
If you hit the Pepe's in Chestnut Hill, it's solid.
Yeah.
So there's actually Sally's is now coming up here.
Oh, really?
Yeah. There's one opening in Woburn.
Ah. Now, what are you, Pepe's or?
Well, so growing up, going to my grandma's house, it was Sally's.
Okay.
But I haven't had Sally's since I was, old enough to, and large enough to really appreciate the differences, right? So I've been on a big Pepe's train living in Cleveland Circle since it opened. But I take my son up to the hockey goalie stuff in Woburn every week.
Oh, nice.
And the Sally's is opening up right there.
Oh, nice.
So
there you go.
I can't wait to hit.
You got to roll them in a league in Woburn. Now, right?
Yeah, exactly. So I'm kind of fired up for that.
Nice.
But
no, New Haven's a cool. It's a cool market. I think it's really cool. So
you guys ever do anything down in Hartford or?
Hartford's, we're working on something right now in Hartford, and it's a different story. It's a different vibe. Right. People love I would give the city of Hartford a lot of credit. They're doing a lot of deals. There's a lot of new development there. I don't know if you've been down there.
Well, I grew up in West Hartford, so that's why I asked.
So they've got the yard goats, and there's now a bunch of new development there.
Yeah.
People love suburban West Hartford.
Right,
people love Manchester. People love kind of suburban Hartford. So. But Connecticut's a market that we've learned that it's a blend between kind of the Boston guys and the New York guys. Right. So it's an interesting mix of kind of buyer profiles down there.
Yeah.
So.
Yeah. Let's, obviously we're talking about the market, but just specifically, if you had to rank the challenges right now in the market on, rates, extra capital needed, the kind of political climate and construction costs, how are you ranking those four? As far as what are the biggest hurdles for deal flow?
I'm going to hedge it a little bit.
Okay.
And I think development.
Yeah.
In the city, I think the political environment is the most challenging.
Yeah.
Right. And I think it's some of the messaging that's come out from City Hall. I think that a lot of it is almost the unknown or the what could possibly happen as it relates to rent control. I think people have kind of come to the conclusion that it's 20% affordable now. I think, while it doesn't help the economics, I think people can kind of live with that and get an understanding. So I would say on the development side, that and rates are the most challenging, right? In my opinion. Outside of the city, it's rates and construction costs, right? So outside of Boston, I knock on wood, I think everyone's saying, we feel like we've been saying for like 2 years, construction costs have to come down. They have to come down.
Dang.
Right. I think everyone's hoping, but I don't know if there's been real hard data to support that yet. So
I think that's more an early 24 thing.
Yeah.
Right?
Yeah.
And that's sort of the way
exactly.
the people that we talk to are just basically saying, because it all comes down to sub pricing, right? And it's guys have pipelines are already full through this year, and now it's how hungry are those guys for work in 24 and 25, and how aggressive are they going to price to get it?
Exactly.
Right?
I think it's it's the not necessarily the materials. I think materials have come back in. Lumber's coming back. I think it's the sub pricing, and everyone's been busy, right? And if fewer and fewer deals are getting put together on development side, there might be relief from that perspective. But so I think on the existing side, I think rates are the biggest, rates and equity. So put in the capital markets. Those two things are the most challenging. So, but smart investors that are well capitalized, either with their own funds or family office or discretionary capital, are finding opportunities, right? And as we know, plenty of people that we both know have done very, very well buying in environments where other people are hesitant because they don't have a clear picture of understanding. So, so I think there's opportunity in that. So, and I think a lot of people, whether they're, whether they believe it or not, I think they feel like land is, there's a good discount, a good buy in land today if you have a patient outlook on it. So,
how do you stay up to date with kind of industry trends, news? What are the tools that you and your team utilize to really make sure that you're at the forefront of knowing what's going on out there?
I mean, first and foremost is just chatter, right? And it's just, chat. We call it chatter, but really it's gossip, right? Yeah. It's what's going on here, what's going on there. Where's that deal pricing? Where'd they get on a return basis, depth basis? And we share data points, right?
Yeah.
I will say we've got a great national head of research on the multifamily side. And we do a call with him every week, and he shows us just macro trends just to kind of show us what's happening in other markets.
How lucky are we for doing what we do where we do it?
We're very lucky. Yeah, it's like,
it's so cliche, but I say that all the time, right?
I've said it throughout my career. Everyone, all the sports championships here, all the economic drivers here. I'm from Detroit. And try to compare those two.
Right.
When someone's complaining to me about the economics, I'm like, listen, I love my hometown, but by the same token, it's gone through a lot of challenges. Yeah. So relatively speaking, I think we're very lucky where we are in New England and Boston. So
all right, so chatter.
Yeah, chatter. The Cushman stuff. Cushman acquired a property management company, and being able to see the data points about what's happening with delinquencies and occupancies and all those other trends that they can see real time. So those are really good resources for us.
Yeah.
And then obviously we're using the same, I think, Real Capital Analytics and CoStar and all that stuff, which is great. But it's a lot of those data points, and then sharing kind of data points regionally really helps us in seeing what's happening in Boston compared to what's happening in tri-state versus what's happening in Philly. And it's a very different story. It's not like a static story across the board. Yeah. And then what's happening in Boston compared to what's happening in the Sun Belt, and more importantly, us for that is where some of the buyers and where some of the equity is going, right? Where people are focused, where they want to be, where they don't want to be. Yeah. And that's really invaluable information for how we kind of run our business.
Right. So obviously we're very multifamily focused, and it is great to have that sort of arsenal behind you of the full research of Cush Wake. What is your opinion on and what data are you kind of seeing as far as how much of a reckoning is there going to be on the office side? And then particularly locally, there's going to be some opportunity on some conversion to multifamily. Yep. And I know it's not as simple as that, and there's a lot of chatter about that, right? But ultimately, I think you're going to see some of that happen. Yeah. And it'd be interesting to kind of see how that unfolds. But what are your thoughts on it?
So, I look back 12 months. It seemed like everything in the office world that could get converted to life science was getting converted to life science, right? So that was the first wave of it. And life science was the darling. big rents, tons of capital. So I think that was driving that. The office space is interesting because it's not like we're having an employment issue. It's just people are just working differently.
Right.
I know I'm working differently. I think a lot of people are working differently. And I think a lot of people are, hopefully it's yielding better quality of life, right? Like, pre-COVID, on the pike at whatever it was, 6:45, 7 o'clock every day, hour in, hour out, like that's changed, right? That's might change for me. I think it's changed for a lot of people.
Yes.
I think the market's figuring out how to adjust to that. I think that there are going to be some conversion opportunities. Not everything can be converted, right? A commercial floor plate to a residential floor plate. It's hard to have it make sense, right?
Yeah,
and as you know, floor plate size, window lines, core, where the core lays out, where the elevator lays out, it makes it challenging in terms of how that's going to happen. But, for better or for worse, back to the earlier comment, I think we're lucky where we are.
Right.
And I think that there are so many other, economic drivers here that it seems like Boston always finds a way to backfill where there may be vacancy. But our office guys are working their tails off trying to figure out how to make that work. So, but there's still activity in the market, which is good.
Yeah.
So, we're lucky. We're ground zero for life science from a national perspective. So I think that will always kind of continue to kind of help, support the office market. So, and I think, so the stuff that get converted can get converted. I think it's also going to be a lot of stuff. I don't think skyscrapers, but there's going to be a lot of stuff that may be obsolete from a floor plate perspective, and we're probably talking more infill to suburban. I see a lot of that probably getting demoed or converted or something becoming something else, right?
Yeah.
And whether it's multifamily or industrial, I think multifamily industrial seem like they're kind of the two kind of driving forces in the markets on the capital market side right now.
Yeah.
So I think a lot of that, I see that kind of getting converted.
So you feel like, multifamily's always been sort of right there. Obviously it was a kind of half click behind life science for a while, maybe even more than a half click. But now sort of it sounds like industrial sort of supplanted where life science was as far as kind of being at the top of the totem pole.
So we've had sites in the city where it was typically, 12 months ago, it would have been a slam dunk life science deal. 12 months before that, it would have been 100% multifamily deal. And now we're getting interest from both. Well, I should say we're getting interest from the multifamily groups, but now we're seeing that the gap between some of these development values and the as-is kind of user values, that gap is not as significant anymore.
Right.
So that's coming in, then that's changing. So, but
right, like in kind of parts of South Boston, that kind of locale.
Exactly.
Okay. Exactly. So we're kind of going to get towards winding it down a little bit.
Sure.
So we'll segue from some of the industry specific stuff to just more personal takes, and we'll get a little bit personal. Nothing too bad.
Now we're a little heart to heart.
Yeah, a little bit. So what's one thing in your business though that almost no one agrees with you about?
What's one thing in our business that no one agrees with me about? Gosh, that's a good question. I'm an eternal optimist, so I think everything's going to be. I think everything's going to be good. So
I'm right there with you,
I think everything's going to be fine. Everything's going to be good.
Yeah.
I think you kind of have to be in our business to be, to be a half glass, half full guy. But I don't have anything specific. But I think just trying to be generally optimistic. We're not that there's naysayers out there, but I think we've seen enough cycles to know that this isn't going to be the end. I'm a big believer that rates are going to come down this year.
Yeah,
I'm a believer in it. And I've never said SOFR curve so many times in 1 year than I have this year. I'm a believer in that. I don't think a lot of people would agree with that. I do also think it might be a little bit more negative. I think we're definitely going to see some foreclosures and some challenges. And I think some people's perspective has always been it's going to be fine. There's not going to be any issues. But I think just by what we're seeing in the market, we're going to see some real chatter, some real chop in the water, so to speak, on deals that either loans that are maturing. So I think we've been watching that, but I don't think people have the same perspective that it's going to go that there's going to be that much opportunity. So
okay, all right. So you mentioned you're from Michigan, right?
Oh, yeah.
So what brought you out here originally?
A girl.
That'll do it.
A girl
right?
who funny story. A girl who we both went to school in upstate New York. She graduated a year before me. I came to Boston. We married, kids, so fairy tale story.
So we were talking about your wife.
My wife, yeah,
okay.
Exactly. I wouldn't bring that up if it didn't end that way.
I hear you.
I'm assuming she's going to see this at some point, so I couldn't go that way. So, but yeah, so we graduated a year before me.
Yeah.
I went to Syracuse. She went to Oswego, so we're both in upstate New York.
Wow.
And
Okay.
it was either New York or Boston. We were not New York people, and I don't think the real estate market in Detroit was rocking and rolling. So I was like, well, let's come east. Let's come east.
I think that's when they were like literally giving things away in Detroit, right? Well,
I remember my mother calling and being like, you can buy a house for like, $200,000. It's like, what am I going to do for work? Like, what am I going to do? So it's all relative though.
So have you stayed like a Detroit fan, or have you morphed into a Boston fan having been here a couple decades?
Catch me in September, and I'll be a pretty vocal, Lions fan about how this is the year and it's going to happen.
Some flashes last year. Some flashes.
Some flashes. Have a 500 season.
I'm a Dan Campbell guy.
I'll take that.
Yeah.
Dan Campbell is great. It's just the energy and everything else.
Ultimate football guy.
Ultimate football guy. So yes, supporter with the footnote that obviously, Boston isn't playing Detroit. Obviously it's hard not to be a Boston sports fan. Just like everyone else watching the Celtics game last night, just hoping and praying that we're going to get one more. So
I know that'll be interesting to see how that unfolds. I mean, they should win at home in Game 5, and then it kind of all comes down to Game 6 in Miami.
I think it really depends on who shows up, right?
Yeah.
It just depends on who shows. Even last night, it was like there were some great moments, but there were also
I didn't watch the whole thing. I caught snippets.
Exactly. Exactly. So
Red Wings guy.
Big Red Wings guy. I mean, I grew up with the Russian Five and Stevie Y. So I mean, they won back-to-back championships when I was in high school.
Have you watched Unrivaled?
Oh yes.
So my older guy, who's just about 9, literally watched that every morning for like a month straight.
Yeah, that's awesome.
Oh, that's great. That's a really good.
Great.
That's a good it's an E60, right?
Yeah, I mean that era in hockey with the Wings and the Avs.
Avalanche.
I mean, it was who was it? It was Waugh and
Mike Vernon
and Vernon going at it center ice with Darren McCarty.
So my son's a goalie, and he was like, he always says, "That's my guy."
You don't see many goalie fights, right?
That's what Mike Vernon said when he saw Waugh coming up the ice.
Yeah, he went out. Vernon went out to help. To help Brandon Shanahan. Yeah, exactly. So I try to explain to my kids, and they're like, "Hi," but it's like, it was pretty epic time in hockey.
The other Charlie's other favorite comment is he got Chris Drapered.
Yes, that was scary.
Yeah, that was just go. I was at we were at a tournament a couple weeks ago, and Jimmy Howard was coaching the other team. Yeah. And Chris Osgood was actually staying in our hotel, and his kid was playing. Both there's one program out of Detroit that's kind of the primo program.
Nice.
And then I saw Nick Lidstrom at a tournament last year.
Did you really?
Yeah. So all those guys kind of stick around Detroit, and their kids play. It's cool. So
seeing Stevie Y run the organization.
The eyes are playing. That's cool. I think he obviously did a good job in Tampa, but that's what they're calling it. The eyes are playing. So let's talk about your game, your beer league game. Are you a stay-at-home D-man? You power forward?
I'm
gonna say you're not a slick playmaking center. I mean,
no. I would say I think the term grinder kind of applies to me, right?
Yeah, hard work.
Yeah. I don't
get in the corners.
Not necessarily. I don't know where my plus minus is, but I'll grind it out, and it's a lot of fun. Yeah. It's D-level beer hockey. There's a bunch of real estate guys that are in it, and it's a great group of guys. We've been skating together for probably 5-6 years now, so it's a lot of fun. So it's funny. You've recommended a couple skates, which I appreciate, and going to your skates kind of humbles me where I am at my level and where you are at your skill level. So
DeMello was here. That'd be a valid comment, but no, it's funny because a lot of people don't realize that it is one of those sports that you can keep playing till you're like.
Yeah, I mean, I played pond hockey growing up, and my highlight was JV hockey, right? So that's the farthest I went. Yeah, I went to a big hockey school in Michigan, and but I'll take the beer league D-level hockey on a Sunday night. That's a pretty good time.
Yeah, it beats the gym, right? It does. So, well, awesome, man. I really appreciate you coming in.
Sure, thank you for having me.
You really are a true stud at your craft, and we love working with you guys and watching all the success that you've had, and appreciate you coming in.
Well,
and,
thank you for having me.
We'll get to do this again at some point. And,
Absolutely.
I really appreciate it.
Absolutely. Thank you for having me, and obviously really like the relationship we've had and been able to build with you guys. So appreciate you guys having me in to talk a little bit. Appreciate it.
All right.
Awesome.
All right. Well, thanks for tuning in to this episode of Empowered Returns, and we'll catch you next time.
Thank you for listening to another episode of Empowered Returns. If you're a forward-thinking real estate investor or developer looking for actionable advice that will help you generate market-beating returns, make sure to subscribe on Apple Podcasts, Spotify, or wherever you get your podcast fix. I'm Mike DeMella with Charles Gate, and I'd love to connect on LinkedIn and further the conversation for any specific questions you may have. Thank you for listening.